my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. An indecisive spinning top yesterday, showing intraday indecision after the recent intraday indecision that was seen at the top of the recent market. As I said yesterday, to be honest, this intraday and now intraday contradictory markets at the highs is not what is needed if prices are to move higher to any degree. Hesitation up here is not welcomed by the bulls, for that I'm sure. It was nevertheless still the 7th consecutive close over the upper trend line, currently 74.10, of what I had labelled a possible descending expanding wedge pattern, currently 74.27 to 68.47. Now, as you know, or you should know by now, I haven't been entirely happy with this pattern, hence there's a heavy dose of the word possible in front of it, even now. For starters, it hasn't completed the usual requisite 5 touches combined of both trend lines. Yet leaving that aside for the moment, as well as its short life and steep downward angle, leaving all those aside, we still do have this pattern. This leads to 2 diametrically opposed questions. Is it a false break higher? And 2, how high will the move be? Okay, so for question 1, well, if it was a false break, then we should have known about it by now. For question 2, well, a primary target X would be in the 78.67 area, with a secondary and much harder to achieve target X1 in the 79.46 area. These are big asks of this market, especially from what is in truth a not too good looking descending expanding wedge pattern. So what do we have above as resistances? Well, there's the congestion around the January 2020 high at 76.30, which capped the market yesterday. Then there's the more recent 76.35 and 76.39 highs. Meanwhile, on the downside, around the broken upper trend line, we have the combination of the 2 moving averages, the rising short medium moving average, currently 74.74, and the medium moving average, currently 74.30. This last bit brings me nicely to a recent factor which, though lagging, may still help influence the bullish side. We had a golden cross 2 weeks ago of the short stroke medium moving average up over the medium moving average. And with that, I'll finish this portion. But so far today, well, a higher open, then peaking a little over the January 2020 high before dropping down and looking like a bearish engulfing pattern right now. And it's not far from being a possible key reversal down as well. German DAX futures. A hanging man pattern yesterday. This pattern is interesting as traditionally is seen as a bearish reversal pattern. However, data indicates that is a bullish continuation pattern some 7 out of 10 times. So it'll be interesting to see if the market follows tradition or the data. Overall prices are still above the declining medium moving average, currently 14.413, yet still within the main body of last Friday's action. Interestingly, it was the second consecutive session where the market had made an open, high, low and close over the medium moving average since mid-January. Yet this has not opened a torrent. We're still closely associated with the resistances, which are now supports, of the declining medium moving average, the lesser Fibonacci line at 14.393, and a 50% Fibonacci line for 2022 at 14.343. If the market can break free of these, then there would seem to be a good upside potential. However, failing to break free eventually means a test lower and possibly a move further down to the maelstrom of support below, down between 13.804 up to 14.079. For the moment, this continues to be the first steps in the markets taken in moving the proposed April to May descending expanding wedge pattern. That's currently 12.578 to 13.872, which is a big move. This pattern has a primary target X in the 15.440 area and a secondary harder to get target X1 in the 15.725 area. These are big asks of the market. So far today, a higher open, but not quite enough for a bearish engulfing pattern, but a higher high and then a move down by the market, such that we are on the verge of possibly making the key reversal down today. If prices move down below the 14,450 level, which is possible as the low today is 14,462, and then close below 14,548, then we'd have a daily key reversal down. US E-mini S&P futures. A hanging man pattern yesterday, as well as a second bullish white soldier. The base of the action, interestingly, was supported and fed ammunition by the rising short moving average, currently 40.87. Now, this hanging man pattern is interesting, as traditionally it is seen as a bearish reversal pattern. However, data indicates that it is a bullish continuation pattern some 7 out of 10 times. So it'll be interesting to see if the market continues to follow tradition or the data. Thus, despite its perhaps perceived bullishness, the action once again rejected the resistances overhead of the upper time, currently at 41.64, the January to March bearish Andrews pitchfork, as well as the middle time, currently 41.74, of the bearish shift pitchfork for the same period. Yesterday was the proper start of the danger period, something I've spoken about now for weeks. This is the crossover period of the two tines. I'd earlier highlighted the previous crossover of tines from these two pitchforks on Thursday 3 weeks ago. And that was as a period of where one could expect one or more of the following: volatility, a change in trend, or a reinforcement of a trend. As I previously said, this was an important time period, and I highlighted it with a red circle on my daily chart. I'd also drawn another red circle for the next crossover to come for these same pitchforks. This is the upper tine of the bearish Andrews and the middle tine of the bearish shift pitchfork, and it is centered on the 7th of June. Hence, I renew my warning and what to look for. Look for volatility, a change in trend, or a reinforcement of trend. Other than these, now below we have the June 21 high at 41.26. Whilst overhead we have the recent 50% Fibonacci line as resistance at 42.19. Further down we have the congestion band at 39.59 to 40.55 that had tried to trap the recent market, so keep a keen eye for what may happen. So far today, well, a lower open and a cautionary attempt to move further down to the June 21 low, and looking like a small bearish harami right now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.